Do we have a Rocky Mountain housing crash on our hands? That's the topic that I'm going to be covering in today's video, and I'm going to be sharing some deep data with you guys on the state of the Colorado housing market and its direction into the future. In particular, we're going to be looking at the four big metro areas, the four big ones: Denver, Boulder, Colorado Springs, and Fort Collins, and I'm going to let you know whether now is the right time to buy or to sell in these housing markets based on what the underlying fundamental data is saying. This is going to be a great video to watch if you're someone who's looking at buying a home or real estate investment property across Colorado, or if you're someone who's thinking of moving to the state, because I'm going to be sharing some deep dynamic data that no one else is talking about. And let me tell you, this data is saying some very interesting things about the future direction of the housing market across Denver, across Colorado Springs. Just to give you a little hint, there's some potential problems coming up in the next year or so, and I'm going to talk about them in today's video. So without further ado, let's get into the data. So we're going to start things off with a little bit of a geography lesson for those who might not be so acquainted with the geography of Colorado. And what we're looking at here are the four big metro areas. From north to south, we have Fort Collins, which is close to the border of Wyoming up north. Then we have Boulder. Then we have Denver, which you can of course see is a really big, expansive metro area. And then to the south of Denver, we have Colorado Springs. And these are really the big four metros across Colorado. Almost all of the state's population and a majority of the housing value across Colorado is in these four metros. And just to take a quick look to get a sense of what home prices and price growth look like, let's take a look at Denver. According to Zillow, the typical home price in Denver right now, the price of a typical home, according to Zillow, is $555,000. That's up 20% year over year, which is absolutely crazy growth. Just a year ago, it was $461,000. Now it's $555,000. Colorado Springs to the south is probably the most affordable area within Colorado. You can see the typical home price is $424,000, much cheaper than Denver, but you can see that it is growing bananas right now. 25% year over year appreciation in Colorado Springs to the south. Then we have Boulder, where, wow, the typical home price in Boulder is $692,000, which is like almost at California levels. That's something that you would see in San Diego or LA, a typical home price nearing $700,000. And Boulder also has really high appreciation. Then, of course, to the north, we have Fort Collins, where the typical price is $489,000, somewhere in between, that Denver price and the Colorado Springs price, and the appreciation is a bit more moderate at 15%. And the central question that you should all ask yourselves if you're looking at buying a home or investment property right now in Colorado, or if you're thinking about potentially selling your home or investment property, is, are these prices today in July 2021, August 2021, are these prices supported by the fundamentals? Right? Do the fundamentals say that prices are going to keep going up or going to stay the same, or do the fundamentals indicate that prices will be crashing and going down? It's very important to ask this question because we want to be forward-looking in terms of real estate investment and home buying right now. We don't want to just get caught up in the bonanza, in the hype. We want to understand what's going to be happening over the next 1, 2, 3, or even 5 years, because chances are if you're buying a home or investment property, you're going to be holding it for quite some time. And I think the best way to get a sense of how supported the current values are in Colorado and if they're going to be going up any further is to compare them to the rest of the U.S. Just how high are these home prices compared to the average U.S. home price, and how much have they changed over time? That's a key question to ask, and we're going to dig into that right now. And so what I'm showing you guys on this graph are four lines. Each of these lines corresponds to one of the metro areas in Colorado. So in green, we have Boulder. In red, we have Denver. In blue, we have Fort Collins. And in orange, we have Colorado Springs. And what we're showing on this graph is kind of an interesting data point. Instead of just showing what the typical home price is, we're actually showing the premium of the typical home price in these markets to the U.S. average. So we're showing how home prices in these markets compare to the U.S. average home price. And let me just start off with an example so you can see what I'm talking about. So in July 2021 in Boulder, the typical home price was $692,000, as we just discussed. Now, the typical home price across the U.S. is $299,000, which means that to go buy a home in Boulder, if you're someone moving to Boulder from another part of the country, you're going to be paying a premium of $393,000 over what the typical price of a home is in America. If you guys are enjoying the data in this video, all I ask is just please hit that like button. I spend a lot of time putting this content together, and I love sharing this data with you. And when you hit that like button, it just gets me more exposure and actually helps me share more of this data going forward. So please do that. Additionally, make sure to leave a comment, especially if you're on the ground across Colorado, Denver, Fort Collins, Colorado Springs. I want to hear what your perspectives are on the market. What are you seeing as a buyer, seller, or renter? When you all comment, it makes these videos better. All right, everyone, let's get back to it. And we can see Boulder is the most expensive metro in Colorado, not even close. Now we can see in Denver that premium is a little lower, but still pretty high. It's $256,000 over what the typical price is in America. Fort Collins is a little less, and then Colorado Springs kind of offers the most value, where the typical price in Colorado Springs is $424,000 compared to $299,000. That's $125,000 premium. But what I really want you guys to pay attention to is not just to what the premiums are today in these Colorado markets compared to the rest of the US. I want you to pay attention to how these premiums have changed over time and basically how expensive Colorado real estate has gotten compared to the rest of America over the last 15 years. I mean, if we go back 15 years ago to 2007, we can see that Boulder was only operating at about $120,000 premium to the rest of the US back in 2007. That's now more than tripled to a $390,000 premium in Boulder compared to the rest of America. We can see back in 2007 that Denver was only $50,000 more expensive than the typical US home price, and today Denver is $250,000 more expensive. A place like Colorado Springs back in 2007 was only about $8,000 above what the typical price was in 2007. Today it's $125,000 above what the typical price was. And so really the story here is how expensive Colorado's housing market has become compared to the rest of the US over the last 15 years. And this is a really interesting development because for a long time Colorado was fairly affordable, right? I mean, Denver back 15 years ago was only $50,000 more to purchase a home than it was most other places in the country. So if you were someone moving to Denver 15 years ago, you felt like the value proposition of your movement was really high, right? You felt like you were going to the city with beautiful weather, the most sunshine in America, outdoor activities, and a good growing economy, and you're only paying a little bit more than you would have been compared to the rest of America. And that value proposition has slowly eroded over the last 15 years for these Colorado markets. They've just gotten so expensive, and they're really starting to resemble more something like how California's housing market has behaved in terms of getting more expensive compared to, I think, the impression people have of Denver and Colorado Springs and Fort Collins, which is it's this growing, bustling, still quasi-affordable mountain state. Well, that's clearly not the case anymore. And why is that not the case? Well, I mean, one of the reasons is definitely all of the inward migration that Colorado has experienced over the last 2 decades. I mean, quite simply, it's been one of the top destinations for Americans who are moving. Right? They love the sunshine, they love the weather, they love the outdoor activities, and so lots and lots of people are piling into the state, moving maybe from coastal areas like New York and California for a lifestyle that at least was a bit more affordable and is more laid back. And this migration really propelled Colorado's housing market for the last 15 years. I mean, when you're adding this many people, right? It only makes sense that it's going to constrain housing supply and push home prices up. And so understanding these trends in migration is really important if you want to have a good handle on why Colorado's housing market is so expensive today and why it actually might be going down into the future over the next couple of years. And so on this graph, we're looking at the migration levels into Denver, the Denver metro area. Remember that big expansive metro area we looked at in the beginning over the last 20 years, 2000 to 2020. And this is data that comes from the US Census Bureau. Each year, they track and estimate migration into and out of different metro areas by looking at IRS tax filings and Medicare enrollment. This is really some of the best data that we have on where Americans are moving. And you can see, to Denver's credit, out of the last 20 years, there's only been 1 year, 2003, where it had negative migration, aka more people moving out than moving in, and that was in 2003, and that was just barely negative in 2003. And every other year there's been positive migration into Denver, which means more people are moving in than moving out, and undoubtedly this has had a big positive impact on the local housing market, particularly starting in like 07, 08, where we can see these net migration figures got up to 26, 27, 28, 29,000 per year. And then they really surged in 2015 up to 41,000 net migration in 2015. That was Denver's best year in terms of attracting new residents. But the curious thing that I think a lot of people aren't aware of is that since 2015, Denver's migration levels have been tanking. They've been going down consistently all the way to 2020, where we had only plus 14,000 net migration into Denver. That's the lowest level the Denver Metro has experienced since 2005. So I think, looking at this graph, you get the sense that yes, Denver is a strong migration market, but the migration trend is going in the wrong direction. And I think that's going to come as a big surprise to a lot of people who are looking at buying Denver real estate, because likely all you ever hear from local realtors and investors is how so many people are moving to Denver and how this migration will propel the housing market into the future. But I'm sure what none of those people are telling you is that if you actually look at the data, Denver's migration levels are plummeting compared to what they were 4 or 5 years ago. And look, this really isn't that surprising when you think about it, given how expensive Denver's housing market and real estate market has become. Again, back in 2012, 2013, Denver still offered a fairly good value proposition to people moving there in relationship to quality of life, economic progress, and cost of living. But over the last 5-6 years, the cost of living has just gotten so high in terms of either buying a home or renting that I think a lot of people are now passing on the opportunity to move to Denver, and or people who already live there are saying, I'm out of here. Let's explore what the situation is in some of these other metros. Here's Boulder, and we can see Boulder is following a broadly similar trend to Denver. You can see that the overall numbers are lower since Boulder is a much smaller metro, but the trend is very similar, where we had a big spike in migration in like 2011, 2012, 2013, 2015, and then that migration trend is really abated over the last couple of years to the point that Boulder really isn't adding many people anymore to its metro, 2017, 2019, 2020. Similar situation in Colorado Springs, where we again had this big surge in migration around 2015, 2016, but then since then it has gone down consistently, and in 2020 Colorado Springs only added about 2,700 people net. Now, Fort Collins might be the one that bucks the trend a little bit. We still have this big surge in 2015 migration in Fort Collins, but it's done a better job at holding these high levels of migration. Really, from 2012 to 2019, Fort Collins has really had its strongest migration in its history. So of the 4 metros, I think actually that Fort Collins is displaying the best fundamentals in terms of continued high migration, despite this dip that it's had in 2020. It's really important that you pay attention to this data if you're a prospective home buyer or real estate investor, because I guarantee you that when you talk to locals across Colorado, they are not sharing this data. They're not telling you about how migration is dipping. And the real concern here is not just migration dipping, but it's migration going down and home building going up. That's the kind of worrying trend that we're seeing right now across Colorado, where less and less people are moving to the state, but more and more homes and apartments are being built, to the point now that there's more apartments being built than there are people moving in. And I think that's going to cause big problems in the housing market across these metros going forward. Let's take a look at Denver so you can see what I'm talking about. Okay, so I know this graph looks a little wild. Just stick with me. Don't turn away just yet. Let me explain what this means. The blue line is still that same net migration figure into Denver. But we've now overlaid it with the yellow line, which is the amount of permits being pulled for housing units across the Denver metro area. And this is the amount of permits being pulled for new homes, new apartment buildings, data that also comes from the U.S. Census Bureau. And the green bars are the relationship between the two. So when the green bars are higher and more green, such as they were in 2008, 2009, 2010, that means that more and more people were moving to the area relative to how many homes and apartments were being permitted and built. So for instance, in 2010, 5.5 times more people moved to the Denver metro than they permitted housing units being built. And basically from 2008, I would say through 2015, Denver legitimately had a big housing shortage. Anytime you see these green bars, the relationship of migration to permits being above this 1.5 equilibrium, that means that there's a housing shortage. There's not enough homes and apartments being permitted and built to support the amount of people moving there. And when you have a housing shortage, that causes prices to go up. And that's exactly what we've seen in Denver over the last 15 to 20 years. However, what worries me is that starting in 2016, all of a sudden, the relationship of migration to permitting has dipped below the equilibrium level. We see 1.2 in 2016, 0.8 in 2017, which means that the yellow line permitting was above the blue line migration. And then in 2019 and 2020, it's been a similar thing where more units have been permitted than people have moved to the metro area. Now, I suspect some of you might be saying to yourselves, Nick, I see what you're saying in terms of the relationship between migration and permitting, but this doesn't add up to the fact that if I look to buy a house in Denver right now, there's very little inventory on the market. Like, how do you explain that? How could there be so little inventory if migration is trending down and permitting is trending up? And the answer lies in the fact that pretty much everywhere in the world right now, everywhere in the world has constrained housing inventory due to the dislocations that were caused in the market by the pandemic. During the pandemic, basically the levels of home building temporarily went down, as well as new listings to the market went down. People were scared to list during the pandemic. That caused a constrained level of housing inventory in the active sense, just at the same time that there was a short-term surge in the amount of people that wanted to buy. And so that caused reduced inventory levels over the last year in most parts of America and the world, across all housing markets. However, those reduced inventory levels are starting to ease. More and more people are now listing their homes for sale. We have a backlog of over 1 million backlog listings from COVID that are going to be coming to market over the next 3, 6, 12 months. In addition, home builders have ramped back up significantly. So we're going to be seeing active inventory increase everywhere over the next year. So the question is not what is active inventory today, it's what is it going to be in 6 to 12 months and how is that going to impact home prices? And when you're in a market like Denver, which is building and permitting more than people are migrating to the metro, you're going to have bigger issues for your future inventory, active inventory levels. So I predict that Denver is going to have a big surge in inventory over the next 12 months, more so than some other cities, which have more of a legitimate housing shortage in relation to migration and permitting. We can see that this is a similar situation in Boulder, which again, from 06 to 2015, did have a legitimate shortage, just like Denver. However, over the last 4 years, Boulder's migration levels have gone down while its permitting has gone up, and that means that it's well below this equilibrium level of 1.5 annual net migrants to permits, and that means that Boulder is looking more and more like it's going to have a housing glut going forward than a housing shortage. Colorado Springs, again, a similar situation. Now, what's interesting in Colorado Springs is it never really had the same type of housing shortage that Boulder and Denver did around 08 to 2015. It was much closer to this equilibrium line of 1.5 over the long run. But again, even in Colorado Springs now, over the last couple of years, we've seen permitting vault up while migration has gone down. That's not a good situation. Now, on to Fort Collins. Again, I think this is kind of the outlier. Fort Collins seems to have more of a legitimate housing shortage than the other 3 metros. You can see that migration over permitting is above this equilibrium level through 2019. 2020 was really the first year where it was really below that level, which is not good. You know, the migration levels did decline a lot in Fort Collins. However, it seems to have more of a justified housing shortage than these other markets. But that's not the only thing we need to consider here, guys, right? The relationship of home building to migration is one aspect, a very important aspect of the future of the housing market, but another is the relation of home prices to wages and income. Because the more money that people make, right, the more that they can afford to spend on housing. So if people in Colorado across these metros are beginning to make a lot more money, that can potentially justify the increase we've seen in home prices, even if the combination of migration and permitting doesn't seem to support it. So the way that I love to analyze this is by looking at the relationship of home prices to wages in the local economy. How much are home prices compared to what the average worker is making? This is data that comes from the Bureau of labor statistics per hour and per year in these markets. And this paints a very interesting picture as well. So that's what we're looking at on this graph, the value to earnings ratio in these four markets over the last 15 years. Again, it's taking the typical home price and dividing it by the annual earnings of the typical worker. So for instance, in Boulder through June, the typical home price was $675,000. The average worker earned $56,000. That's 12 times. The home price is 12 times the average earnings of the typical worker, and that's extremely high. Like that 12x is like a level experienced again in like San Diego, LA. That's what Boulder is throwing off in its housing market right now. We can see that Fort Collins has the second highest value to earnings at 9.8. Denver is third at 9.0. And then Colorado Springs is fourth at 8.2. Now, what's this gray line? I added this gray line for some context here. This gray line is Miami. And in Miami, the value to earnings ratio today is 7.1. So the typical price is $348,000 divided by annual earnings of $49,000. And the reason I added Miami to this graph is so you can get some context to see just how expensive actually Colorado's housing markets are compared to a place like Miami, which is expensive in its own right, yet these markets like Fort Collins and Denver and Boulder are way more expensive. The other interesting thing to look at is to go back in time and see what the situation was in 2007, where it was flipped. In 2007, prior to the last housing crash, Miami was the expensive market, value to earnings of 8.9 in 2007, while these Colorado markets were cheap back then, 6.8, 6.5 in Denver, 5.4 in Colorado Springs. So prior to the last housing crash, Colorado was actually very affordable relative to wages, which is one of the reasons why prices didn't really go down much across these Colorado markets during the last housing crash, is because the prices were much more firmly supported by wages. But of course, today in 2021, we have a completely different situation where these Colorado markets today in 2021 are looking like the Miami of 2007. So ultimately, this is a nasty cocktail for the future of home prices across Colorado. The fact that home prices are now so high relative to wages, a situation which has never occurred in these markets' history, prices getting really, really high above what people are earning, just as migration is declining below the levels of home building. That's a tough combination for the Colorado housing market to absorb going forward, and that makes me think we're going to have price declines across all four of these metros over the next year or two. And so if you are a home buyer, real estate investor looking into these areas right now, you need to be very careful. Do your due diligence. Make sure you know what you're getting into. Make sure you have a realtor that you can trust locally that isn't just selling you a bag of goods about how the growth is so good in these markets and it's going to go on forever. Make sure that you really know what you're getting into, and also identify whether your perspective is long-term or short-term. This is something I keep saying in these videos. If you have a long-term perspective as a real estate owner, whether it's a home or investment property, if you feel like you're going to own it for 5 to 10 years and you're not going to sell it and you have the cash and the mental wherewithal to withstand a downturn, you could still buy today, right? And you might say to yourself, hey, I don't care if prices decline by 20% over 2 years because I'm going to hold it for the long run. But if you're someone who is more of a short-term investor, FOMO buyer, flipper, you could run into some real problems buying across these Colorado markets right now, especially if you don't have the financial or mental wherewithal to withstand in your head or your pocketbook a 20 or 35% decline in values over the next couple of years. So if you guys really enjoy this content, if you're thinking of buying a home or investment property over the next year and you want to learn more about real estate data, think about subscribing to this channel if you haven't already. I come out with 3 of these data-driven videos per week, and you're not going to want to miss this content going forward, especially as the real estate market begins to turn here in the summer of 2021. You can already see it happening. People are acknowledging the housing market's cooling. I think it's going to enter a crash stage very soon. So you're going to want up-to-date data, and I'm going to provide that data to you guys on this channel. So make sure to subscribe. Also, think about joining the channel as a supporting member. The cost is $5 a month. You help me out financially, which helps me produce more of these videos going forward. But in addition, you get some really cool perks as a ReVenture channel member. We have an exclusive members-only community board here on YouTube where I post data, graphs, maps that only you members can see. Additionally, you can have input into what the future videos on this channel are going to be. I polled my members about a week or two ago and asked them what markets that I should cover next. The first one they said was Las Vegas. The next one was Denver. That was my last 2 market deep dives. So if you want to support this channel financially, get some exclusive content, and have input on future videos, think about becoming a member. There's a link in the bio. All right, everyone. Until next time, this is Nick from ReVenture Consulting signing off.